Good morning, everybody, and welcome to today's Morning Coffee with Mike. Take two from yesterday. Yesterday's episode was not recorded, some technical difficulties, mainly me having the microphone on mute for half the time. So, we're going to do take two of trading routines. Why? Because it's a super important topic and it's really the thing that saved my ass over the last couple of days. I've you didn't know I've been sick. I got sick on Tuesday morning into Wednesday, and now was finally feeling better. Starting to get back into the regular swing of things. Went to the gym this morning, felt good, and yeah. So it was the trading routine part of it that really saved my hide. And the reason why is because all of this, getting sick, having emergencies, all those kind of things are baked into my trading routine. The way that I structure my trading routine is for the worst case scenario. So if the lights go out, right, like that, I've had the power go out on me multiple times. For those of you that live in Long Island, you know all about PSEG and how out of nowhere, a beautiful day, the power can go out. Plan for family emergencies, plan for getting sick, all these things that can have an adverse effect on your trading. Life throws you the curveball. We've got to be ready to hit it or at least know how to react. So here's I'll give you what my trading routine is, but before we get into my specific routine, I wanted to start with asking a few questions because questions really are the answer, and questions are the things that will help you figure out what's going to be the best trading routine for you. So, first part of the trading routine is to figure out, when is your prep getting done? When is it getting done? Is it getting done in the morning? Is it getting done in the afternoon? Is it getting done at night or on the weekend? When are you doing your trading routine? For me, I do my trading routine at night and on the weekend. And the reason why is because my style is best for that. So, well, what's my style? My style is swing trading. So that means that I'm holding my winners for about a month. So the way that I can go about finding trades and planning trades is to do research at night, do research on the weekend, and then set up all the trades, right? So all everything that's going to trigger. Like right now, today, I had one trade on that I finally found a trade that I liked, that I was interested in. It's this one here, KNSL. As a matter of fact, why don't I share my screen with you and just show it to you real quick? KNSL. Sharing it over here on Instagram, and let me share the screen over here on YouTube. KNSL. That's the one stock that finally interested me today, or coming into today. So yeah. So the stock was setting up in a cup with handle, had all the characteristics that I liked. I have a tool for when I find stocks that I like. I call it the Trade Gauntlet. It's actually available on marawealth.com. I'll bring that over here and you guys could see. So marawealth.com, you just come over here to links, go to Trade Gauntlet, and this thing is free. And it's a fantastic tool. This is something that I use on every single trade. I run any trade that I'm interested in through this whole big long checklist here. And each one of these items on the checklist has weights assigned to it. So I'll go through the whole list, and at the end, I'll get a score. If the stock scores above a 7, then I'll take the trade. If it scores under a 7, then I'll pass. The reason why is because I went through all my prior trades and I saw that my best ones all scored above a 7. Anyhow, back to routines in general. We can come back and talk about stocks later on if you want. All right. So I'm doing all this as part of my routine after the market's closed. When the markets close, I find that it's a lot easier to do an analysis. The bullets aren't flying, the P&L isn't going all over the place. I could just sit there and focus on what my screens are going to be, finding stocks that I'm interested in, putting them through that gauntlet, and then seeing if I want to take the trade or not. And then I just set, once I find a trade lot like this one in KNSL, hasn't triggered yet, but I have all my orders already set up with my broker so that way I don't have to do anything. So if it crosses above my entry point, I'm in, and I've already pre-planned the number of shares that I want to buy. If the stock falls, I've already set my stop loss. That's taken care of. If the stock runs, I've already got my first and my second scale outs all planned in, all sitting there with my broker. So there's nothing extra that I need to do at this point. It's all there. Uh, See a question coming in from Handsome Pips Forex about day trading single pairs. Well, we'll get to that. We'll do a full open Q&A as soon as we're done with the trading routines part. Just wanted to let you know that I did see a question. All right, so the next part of the trading routine that I count as a trading routine anyway is when are you going to manage your trades? Some people like to manage their trades throughout the day, actively managing the trades throughout the day. Some people like to manage their trades at the end of the day, and some people like to manage the trades at the end of the week, sometimes even longer, depending if you are a long term investor. There's no one right or wrong way. It's a matter of figuring out what's going to work best for you, what's going to work best for your particular style, and perhaps most importantly, what's going to lead you to the result that you want. For me, I blend midday activity and end of day activity. So I'm managing trades in the middle of the day. I'm managing trades at the end of the day. Now, the way that I manage trades in the middle of the day is automated, right? So remember when I was telling you about setting up all those orders with my broker? So right now, if a trade happens to trigger, that's well what I would consider in the middle of the day, and it's already set up. It's automated. I'm able to sit here and talk to you guys, and I don't need to be looking at the screen, seeing if the stock triggered. I don't need to set up alerts that tell me to go onto my phone or go log into my broker to do any of that stuff. It's all pre-planned. At the end of the day, I like to look at the price action. And the reason why I like to look at the price action at the end of the day is because at the end of the day, that's when I tend to get my best signals, and the best signals for if I should exit the trade. What I'll look for at the end of the day is what I call danger signals. Danger signals are things that are telling me that the trade is losing momentum. And once I get enough danger signals, I'll use the weight of that evidence to exit the trade. I talk all about danger signals in my book, The Trading Mind Wheel. You can tell that I'm even going through it and making notes on it about halfway through it, and going to be sharing a lot of the highlights of it from you guys, for you guys, creating some more content around that too. If you haven't gotten the book yet, it's getting lots and lots of great reviews. Go check it out on Amazon. It's also available on Barnes and Noble, Target, Walmart, basically wherever books are sold. And if you happen to live in Massapequa, I think that they still have a few signed copies left in the Barnes and Noble over here. Anyhow, that's how I manage my trades. That's how I have my trading routine for the middle of the day and for the end of the day. What allows me to operate in this way is having a clear set of rules. So my rules say if price does this, then take such and such action. And it's all written out, it's all very clear. What allows me to follow these rules and to have faith in these rules is that I've taken the time to go and test them. I've taken the time to go back through history, see how they would have performed on historical winners, model book stocks. I've gone back in time and to see how these rules would have affected my prior trades from last year, the year before that, and I've got the results. So because I know the results of my rules, it's very easy to follow them. What makes following trading rules difficult is if you haven't taken those steps, because then you're putting blind faith into someone else's work and you're not fully sure how it's going to work, how it's going to play out. And that's when we tend to run into problems. So that's my trading routine in a nutshell. That's why I do what I do, and we'll open up the floor to questions. I'll scroll through here and see if there's any questions related to trading routines, and if not, then Handsome Pips Forex will get to you. Let's see, just scrolling through here on Instagram. And it doesn't look like there were any questions yet here on Instagram. So, Instagram, get your questions in. I'm going to answer this question here from Handsome Pips Forex that says, "Hello, boss. I do day trading in single pair in Forex market. I want to know what a routine can you advise for me? I like London session and New York session." Great. So, when it comes to day trading, when it comes to specifically for Forex. Now, I'm not a Forex trader, but I have a number of friends that are Forex traders. Austin Silver, uh, Akil Stokes, Jason Greystone, all guys that were affiliated with the Trading Mind Wheel Virtual Conference and spoke there. If you haven't seen the Trading Mind Wheel Virtual Conference, the recording is up. It's on YouTube. Make sure that you go and check that out because it was a fantastic, fantastic day. So for trading routines, often with when it comes to Forex, people will intimately know certain pairs. In the stock market, it tends to be a little bit different. In the stock market, it tends to be where we want certain criteria to look for in a stock and then see if that stock fits that criteria. In Forex, my understanding is that people learn certain pairs, learn the movements of certain pairs, and then trade the focus on X, Y, and Z pairs. So if you're going to set up a routine around that, you would want to give yourself enough time, enough of a buffer to be able to go in and see the types of setups that you're going to find, those types of setups that you're going to look for. So you mentioned that you're day trading. If it were me, and I was a day trader, and I was specifically day trading Forex, what I would want to do would be to be able to log in at least, I would say half an hour to an hour before I was getting ready to trade. And I would also want to think about the time frames that I'm trading. I have day traded before. I'm not actively trading now. The time frame that I would day trade on when I was day trading was the 5 minute. And I wasn't day trading Forex, I was day trading stocks. Uh, if you're using a 5 minute chart, I would want to see at least several hours worth of data. And I would also look at daily and weekly timeframes when I'm looking at that. So in order to prepare to find moves, uh, I would want to start preparing about a half an hour before, so that way I could start to flip through the charts, start to see is something potentially developing, set levels, and then wait for alerts to go off. And in that case, that's when I would be manually entering orders and setting up alerts and trading in that way. If something that we spoke about earlier happened, right? So one of the emergencies happened. Let's say that you're sick. Let's say that there's a family emergency. Let's say that the power goes out. In those circumstances, I simply wouldn't trade. If I had a trade on, let's say that the power goes out and there's a trade on and you're day trading. Now that's a rough situation. What we want to do in that circumstance is have multiple ways to access our broker. So if you're on a desktop, do you have your phone set up where you could log into your phone and place an order there? Let's say the broker goes down. Do you have a backup broker where you can place an inverted trade, right? So let's say you're long, can you go log into a different broker and place a short trade so that way you net out at least for the time being. It's important to think through these types of contingencies so that way you're very well prepared in case they happen. So those are my thoughts. Let me know if you have any follow-up questions on there. Handsome Pips Forex. Let's see. Well, what other questions you guys have? We've got a few more minutes left here. Just scroll through Instagram, see if there's anything that came in. How's my voice today? Still have a little bit of a tickle, but otherwise I'm feeling okay. Yeah, for any of you guys that want to join me live, I'm happy to do a live stream with someone. If you want to come on, if you want to get coached, if you happen to be watching and you want to do an interview or something like that, I'm happy to do it, but it needs to be pre-planned. If we pre-plan it, then that allows both of us to prepare, and it just makes for a much greater, much deeper conversation. So if you want to come on and get coached one-on-one live, or if you want to interview me or do something else, just reach out. We'll plan it, and we'll have a great time. Any other questions? Small, consistent risk versus big reward. It really depends on the individual. I don't see a question there. It seems like it's more of a comment. If it is a question and we're saying which is better, small, consistent risk reward or a big reward to risk, it really depends on the individual. Here's a great example of it. When I first started out with Can Slim and William O'Neill's book, How to Make Money in Stocks, the way that William O'Neill traded was that he was the big home run hitter. He would try to hold for the big moves, and he was often in some moves that would be several hundred, several thousand%. When I read that book, I said, I want to be just like that guy, and I'm going to treat this book like a cookbook. Didn't work out that well for me because my risk profile, my internal risk profile, it didn't allow me to go for that. And also, I found that I wasn't comfortable sitting through the drawdown periods in order to get to those larger gains. So I was still able to use his broader methodology, but I wasn't able to use his tactics. So what did I do? I later on found out that there's multiple ways to trade his way, the Kensler methodology. And I discovered swing trading. Guys that do it great. Mark Minervini does it great. Dan Zenger does it great. David Ryan does it great. And there's so many other people that swing trade. You learn from all of them, learn from books, learn from people that at the New York City Investor Business Daily Meetup. If you could go to a meetup and meet people in person, I think that that's one of the best ways to learn. And then, of course, doing things like this, where you're able to talk to other people and learn that way, and your own experience too. Those are things that started to show me that there's other ways to trade a methodology, and I also got the beliefs to see that this actually works. And what I mean by getting the beliefs that this actually works is not just reading it in a book, not just meeting with some people and seeing how it's working for them, but actually taking it and then going off and testing it on my own. That's such a huge part of it, and it's important. So one comment that popped up here that looked like a paragraph. Let's see. Let's read this. Okay, from Sable Sunsets. One thing when I sell after hours, I put in a market value day trade where the first person getting in there to get money fast. So maybe people getting in right when it opens could get a good deal. If it's working for you, then great. For me, I the thing that I would question would be, is it are you almost trying to predict the future on some of these? When when I place trades, I like to buy breakouts rather than to buy dips. In the case that in this case, it almost seems like it would be the equivalent to buying a dip where a price comes in and you're thinking the price is going to go in your direction the next day. So essentially, we are uh, not waiting for a follow through. Some people are great at that. Some people are great at finding an absolute low, a support level, whether it's a moving average, whether it's something, and that can work. What I find is that even if there is a support level that I'm interested in, it often works out waiting for the bounce after the dip and getting confirmation, getting follow through on that. Uh, here's a great example. Right, well, let's move some of this stuff over, and I'll put the screen back up. Still got KNSL up here. It hasn't moved yet, but here's a stock that we were actually talking about with members yesterday, Duolingo, which, if you could see here, this is one where it it was setting up and then it fell, and it fell hard for several days right here. And I'm not sure if you could see, but there's two trend lines that I've drawn here. Uh, there's this one that, yeah, maybe that's a 45-degree angle, maybe a little bit less. And then there's this one here that's very steep. What this pattern here, it's actually a fairly rare pattern that's called a bump and run. Basically, you start off with a downtrend, and then all of a sudden there's this waterfall that happens where you just fall and then the price bounces. Now, to go back to what we were saying earlier, if you were looking for spots to get in on this day, right? The low of this day was $116, right? 116.82 to be exact. You might have noticed that that low coincided fairly well with this low. So that might have started to get you excited about getting in over here. Well, another thing that you might have noticed is that it was coming in fairly close to this moving average right there. That is the 100 EMA. So if you were buying right there at the end of the day, the risk that you're taking on is that you didn't know if price was going to follow through yet. Maybe it continues to pull back a little bit further. Maybe it goes to the moving average and tests that and actually tests that low. Maybe it just slices right through all that and goes down to the 200-day moving average. We have no idea. By waiting for the follow through, you're able to get in at the high of that day, the following day, right? So if you place an order right there, that would be fairly aggressive. Another way would be to go 2 days back and buy at the high of that day, and that would have gotten you in there, and you'd still be able to manage your risk versus the low of that day. That's some of the advantages of waiting for the follow through, waiting for the bounce after the dip. All right, and I think we are out of time. So, want to say thank you all so much for joining me today. It's been great, and it's good to feel better too. The past couple of days, yeah, I was feeling like crap, but glad to be here, be with you guys. Thanks so much for your great questions, and I'll see you back here again tomorrow at 9:30 a.m. Eastern Standard Time. Take care, much love, peace out, everybody.